All right, all right. We are back on the best morning show in finance. I am your host, JC Parets. We got Spencer Israel, the voice of God, the John Facenda of technical analysis. We got Alfonso on the ones and twos, Steve Strazza in the house, Jason Purrs coming through. It's Monday morning. Let's go. All right. I gotta say, go on vacation. Like, seriously, get some sun, especially if you live in the Northeast. Man, I needed some sun like you wouldn't believe. My wife certainly needed some sun. How am I looking? Spencer, what do you think? I got a decent tan?
You actually do look like you got color. Yes.
Not bad. Not bad. I got a real sunburn. Sunburn's a strong word, but, a little red. Got to tell you, so the ocean, so we're in Fort Lauderdale, and it was awesome. Good eating, good weather, good people. And what's unbelievable is that in the middle of February, in the dead of winter, the water in Fort Lauderdale in the ocean is warmer by a long shot than the warmest part of the entire summer in the Jersey Shore. Right? So what's the warmest part of the summer? Maybe like July or August, probably, right? Maybe early August, late July?
I would say August, yeah.
August. It is still substantially colder in the Northeast, the water in the summer than it is in February in Fort Lauderdale. How about that?
Yeah, the only difference is people swim in it up there and they don't down here.
There was the same amount. It was probably the same number of people swimming in the ocean while I was there than there are in the summer in the Jersey Shore.
I'll swim this time of year. I don't care.
Dude, it wasn't cold at all. I mean, it was choppy is the only thing. It was like the red flag or whatever. So it was choppy. So it was like not that comfortable being in the ocean, but it wasn't because it was cold. It was because it was choppy as hell.
I don't like the waves on the East Coast.
You don't like the waves on the East Coast? What about the ones on the West Coast?
There barely are any on the West Coast. I can't relax in those waves. I can't relax trying to fight the waves.
No. It's too much. And the West Coast is just always cold, no matter what. It's just freezing. The water's just freezing.
And they get the seaweed over there. The nasty, that stank seaweed comes in.
Yeah, but you get the seaweed in the East Coast. You get that stank seaweed in the summer.
Do they?
Yeah, of course, man.
Yeah.
I mean, I know you're in the Keys, so you guys don't have beaches down there, but like where there are beaches, the summers get pretty bad.
So overall, lovely trip.
I ate so much seafood. I
saw that.
Dude, like overkill. Like I got this thing in my head that oysters are so good for you. So now I just go out of my way to eat oysters everywhere I go. Like I just show up at places. I'm like, a dozen oysters.
Well, stop. That's not a myth. It's true.
No, I know.
The definition of good and good for you, oysters.
Yep.
So I hope you ate 100.
Dude, everywhere I went, I was just like, yeah, let me get a glass of champagne and a dozen oysters. How you doing? Keep them coming until I tell you to stop.
I saw some stone crab in the mix. Is that right?
Dude, stone crabs. We had good sushi. This place called Takato. Good sushi, good eating, great massage. I got to tell you, the Four Seasons massage. This is the third Four Seasons that has a killer spa. The one in Nashville, the one in Philly, and apparently the one in Fort Lauderdale. They do a hell of a job.
I've been thinking about massages all weekend because of you.
Yeah,
I'm really happy for you.
But we'll get to the markets. But man, I got to tell you guys, wow. Especially like when you're in the Northeast and you got a zillion kids like us. I mean, I needed it. My wife definitely needed it. And, we're feeling good, energized. Let's go. We got markets. Things are moving. It's a bull market. I don't know if you heard.
A little saltwater therapy.
Oh, hell yeah. Hell yeah.
Love it.
Do it, man. All right, ladies and gentlemen, we've got the Dow futures up 260 points this morning. 43,745. S&P 500 futures up 0.5%. That's 31 handles to the upside. 60.60 for the S&P 500. NASDAQ 100 futures also up 100 points, about 50 basis points there. 30-year bond futures down 0.25%, just under 116. You got crude oil flat, holding that 70 level. Copper down about 0.5% or so, 454. Very impressive there still. Gold up another 0.5% this morning, 29.70. Silver down 1/3%, just under 33, with the VIX back down under 18. You're looking at 1760 for the volatility index. And then over in funny money land, we got Bitcoin down 260 points. That's 96,000. You got Ethereum down 4.5% this morning, 130 points for Ethereum to the downside, just under 2,700. Solana continues to get rocked, down almost 5%, under 160. And then you got the total crypto market cap. What do you got, Spencer? What's that total crypto market cap? Are we still hovering around that 3 million? 3.09 trillion for total crypto market cap. Dollar has gotten the crap kicked out of it. Had a decent turnaround last night there for the dollar index, but we'll see if that's sustainable. Really getting slaughtered. New multi-month closing lows for the dollar index last week. How do we feel about that?
All this is great. I have updates for you. First sentiment update. Golf for the first time in a while. It's actually been like over a month since I've been with my golf buddies. Nobody's talking about crypto. They're talking about gold physical bars. Like a couple of them have physical gold. And they're like talking about the price of gold. Nobody wants to talk about crypto anymore. Thought that was fascinating.
Yeah, that is fascinating.
It was very different. Also, while you were out, let's play a game. So I'm going to throw you a couple different headlines from last week. You're going to tell me which headlines likely moved the market.
Okay.
These are just things that I'm hearing. Okay. First, slowing growth in the U.S. economy because of Doge. So whoever would have thought that cutting government could eventually then cut government outlays and government spending, which could hit GDP. Government spending is about a quarter.
Thing. That's a Keynesian thing.
Listen, I'm not gonna get into economic theory, but government spending in the United States of America is more than 25% of GDP. So it's a big number, and yeah, that makes sense. So maybe people are factoring in lower growth. Steve Cohen said a lot of scary things. Did you hear Steve Cohen? Spencer heard Steve Cohen.
I did not hear what Steve Cohen said.
I think that moved the market last week. A new COVID. Have you heard about that?
Oh, yeah, I heard about that.
There's a new COVID. Need I remind you, when COVID came out a few years ago, remember what country did the best?
What country did the best when COVID came out?
It's like COVID didn't even happen in China. Remember that? The relative strength out of China. So maybe, China was
Steve, maybe eventually, yeah. Not at first though, right?
China was more resilient than most countries in a big way. Go look. And now these headlines you thought rocked the market last week, and then you looked at China, and China was green. So interesting.
So the relative strength in China is off the charts.
What an interview from Brian Armstrong. All over the place.
Yeah, I had Strazza texting me while I'm on a little vacay, texting me Brian Armstrong interviews.
What a gangster.
That's pretty gangster. And then so SEC dropped anything from Robinhood also. So Robinhood getting investigated, Coinbase getting investigated. They dropped both with nothing, right?
Yeah. They'll have to be treated the same way. Coinbase has really.
And how about him calling out the communists? What's the Pocahontas?
Called out a couple people got named.
Who was the other one that he threw under the bus? Pocahontas and the other one? Gensler?
Gensler. Yeah. But then he said some really, so he's playing politics now. He started saying really, really nice things about the new people in there at the SEC.
No, he did say that these communists are not representative of the entire Democratic Party. And I thought that was cool.
He's smart, man. He's
got a lot of friends out west that are libs.
Look at what a difference a year makes, right? Yeah. A year ago, they were coming after this company. Now he's in all these executive branch meetings, helping craft policy for his company.
As he should. They should use him.
100%. They've always been the good guys, and now he's like touchdown dancing in the end zone. He made some like really good points. How it's unprecedented for the SEC. They basically said, "Sorry, we effed up."
Dude, you're such a white guy. They're doing some touchdown dancing.
Nothing changes about their business. No fines were paid. And he said like the entire crypto industry in America was in jeopardy, and they basically fought the good fight for the whole industry. And what a disaster it would have been.
First
If
of
they
all,
didn't win this.
you've been saying this all along.
So very happy for him. I just the interview is great. Go listen to the stuff he says. And the one other really interesting thing, if you want to kind of talk about fundamentals. So he talked about what stood out to me more than anything was, and we talked about this on the show on Friday with Louis, how Coinbase will eventually need to reinvent themselves, just like any traditional broker, right? Fees are going to get driven to zero in crypto. They're huge right now. The trading fee business is their whole business. But he's already thinking, I need to find new revenue streams. That's not going to last forever because that's just the economy of a fee business. They will get driven down to zero. So one of the things that he mentioned a bunch of different new revenue streams. They're not missing this whole betting market situation. I think they're going to be very involved. I think they're going to be one of the leaders in the space. They didn't rush to try and like get in there for the Super Bowl like Robinhood, but they have some big plans to enter the betting markets. I think that makes so much sense. JC, wouldn't you want to do things on the betting markets on your crypto app? Like, I think that works together. I think that really works together.
I mean, listen, degens are going to degen, and you want to make it easier for humans to make bad decisions.
Yeah, but let's degen on the same platform, right?
Right. That's what I'm saying. Like
one-stop shopping.
Like you want to do dumb shit over here?
Yeah.
I got some even dumber shit you could do, and you don't even have to leave the app. You know. It's kind of like casinos. Casinos are like that. They want you to stay in there. So you keep gambling. We'll just keep giving you drinks. You know, you don't need to leave the hotel. Here's for complimentary steakhouse, complimentary buffet. You want to see a show? We got shows. Stay here. We're good. Spa, knock yourself out. Free spa. Like they don't want you to leave the hotel. It's
a good model. It's a good model. I like that model.
Wait,
I don't want to go anywhere.
Especially degens.
Wait, Steve. So in that same vein, though, then crypto for DraftKings, crypto for FanDuel.
Yeah, when can I link my Hard Rock Bets account to my Coinbase account? And no, I wouldn't want to do it in reverse fashion. You want to go buy Bitcoin on your FanDuel or your DraftKings?
No,
that's not reality.
No, that's not true.
All right,
can we get into some markets, please? There are things that are moving. Spencer Israel, if you will, my good man. Slide 2, please. Let's just go down the list. Let's put things in perspective. You know, I had a nice little charting session last night, getting back from vacay, put the kids to bed, pour myself a little glass of wine, a little how you doing? Nice. You know what I'm saying? A little shots enough do pop.
Nice.
Little shots enough. Yeah, no doubt. Yeah. And I'm like, am I really opening a bottle of shots enough by myself? And I said, fuck yes. That is what I'm doing, and there ain't nobody that can tell me otherwise.
Wow. How was it?
Shut enough to pop. It was great. Yeah.
And the charts were good too?
Yeah, the charts were good. Yeah, the charts were good. 100%. Healthcare was a little better than I thought. China was even better than I thought. Europe was better than I thought. Here's the S&P 500. I mean, I'm just not seeing anything different where, you know, we've been grinding sideways, right? Within an ongoing uptrend. Just not much happening here from a bearish perspective. Haven't been able to resolve higher in this consolidation. And, you know, if history is any indicator, then these consolidations should, in fact, resolve in the direction of the underlying trend. Maybe they will, maybe they won't. As long as we're above that 5,600, the trend is higher. You know, so we're in this range, and that, you know, hasn't changed. And by the way, when you go sector by sector, a lot of these things are in a similar range. Look at industrials, look at financials, technology, right? Anything except like communications, right? Keep going higher.
Is this just like a nothing to see here situation?
It's not so much nothing to see here, just reiterating the same thing, right? I left last week, you know, everybody's telling me that the bear market's here and oh my God, and the boogeyman and all this stuff. And I guess I'm just not seeing it. So here's the Dow Jones Industrial Average, very similar sort of situation within this range. Look at the NASDAQ, same thing, leading the way higher earlier this morning. Now the Dow's the big winner so far. You got the NASDAQ 100 again, still within this range. And then if you go over to Europe, you got the Euro Stock 600, highest weekly close in European history. So I'm walking around doing a little shopping. You got to be careful in these, where I am. I guess I was like in the bougie part of Fort Lauderdale. Some of the stores, like these are like $300 shirts and shit. So my wife gets in there, and so I'm just shooting the shit with this Israeli guy who said he went down there on vacation 30 years ago and then just stayed. So I guess he runs like the souvenir shop there. Nice gentleman. And so I'm just shooting the shit with him, and he's like, I started asking about Israel because he was just there. So he's just telling me that, like, it's just a way of life, like just as sad as it is to say. But he looked at it as a positive. He's like, at this point, like people are just like, always looking around for, shady things going on when in the past they would fall victim to some of that stuff. So like people are more aware that they have to be aware. And he kind of spun it in a positive way. And I was telling about the stock market in Israel, how it was just ripping. And, he's just telling me how Europe is a disaster and how Europe is not going to last over the next couple of years. Like in the next couple of years, Europe is going to completely collapse. And I'm telling my wife, I'm like, yo, this is the sentiment that's out there. With this guy spitting right now, telling us how terrible Europe is as Europe makes new all-time highs every week. Like everybody thinks that Europe is about to completely collapse, and the stock market is telling you the exact opposite. So I thought the very nice gentleman, this Israeli man, he was wearing his Jerusalem cruisers, like he was chilling, dude.
From an economic standpoint and market standpoint, as you could shown here, maybe Europe never collapsed, but it's been a dead zone for almost 30 years out there. You could say the same thing about something like Japan, and look at what's happened since Japan came out of that base. Remember when we talked about the big base in Japan?
Yep.
So I think, listen, I
think that guy, what he was spitting is really representative of what people in general are thinking out there.
And JC, that's why these trends have legs. A breakout's a breakout, right? You could look at these charts and say they're going higher. The technicals can do that for us. Now, how high can it go? I need to lean into sentiment and valuation for that. The sentiment in Europe, exactly like you're saying, nobody wants these stocks. Nobody's wanted them for a long time. They're not invested in them. And the valuations, they're coming off the lowest levels in history, some of the lowest levels in history, from the most standard valuation metric standpoint.
How about
I think these trends have huge legs for those reasons.
Uncle Warren, what a stud. Dropping earnings releases over the weekend like a G. Just like,
does anybody pay attention anymore to
dude,
this?
all I saw was people complaining about how he's in so much cash and how JC thinks he's a better investor than Warren Buffett because Warren Buffett's raising cash and JC's buying stocks. Who do I think I am? Like this sort of mantra. This is real. By the way, for you idiots out there, you know who I'm talking to. You know it's you. You're an idiot. If you think that Warren Buffett is great at timing the market, you're a moron. He is historically terrible at timing the market. When he's raising cash, it's historically a very bad idea to be raising cash. When he has no cash, it is historically a bad idea to have no cash. Warren Buffett, one of the worst market timers in world history, and he admits that. And the transparency that he has had for so long, we have the data. He's not good at it. So when he has a ton of cash, historically, that's a great time to be buying stocks. When he has no cash, you better be selling.
Can I just read you the quote from the letter about this? Because he is trying to downplay the amount of, like, to him, like the amount of cash they have is not, it's not a signal that they own, that they have a lot of cash, right? To him. I'm going to read this. All right. So this is from the letter from over the weekend. Despite what some commentators currently view as an extraordinary cash position at Berkshire, the great majority of your money remains in equities. That preference won't change. While our ownership in marketable equities moved downward last year, the value of our non-quoted controlled equities increased somewhat and remains far greater than the value of the marketable portfolio. Berkshire shareholders can rest assured that we will forever deploy a substantial majority of their money in equities, mostly American with international operations. Berkshire will never prefer ownership of cash equivalent assets over the ownership of good businesses. That's it. Bada bing, bada boom.
I love that Warren's calling out these morons, but also, like, you could just look and like see what has happened historically when he raises a lot of cash, and it's always a bad idea. And when he has no cash, that's always a bad idea. So like, why would you think like it's just right? I mean, what are you thinking?
Yeah, I don't know anything about like back testing Warren Buffett's cash position and what kind of signal that's been because I don't care. What I do know though, because we do
I'm
have the
telling
data.
you, it's terrible. A
I
terrible
believe you. I
indicator.
believe you. What I do know though, because we've been doing it for 5 years now, is whenever we get a Form 4 from Berkshire, we pull up the stock chart, and it's almost never a stock chart we'd be buying. They're
Yeah.
always in downtrends when he's buying these things.
And then he sold Apple at the lows, and then Apple ripped 20% in his face, and he had none of it. So like, he's not trying to time the market. And if he is, he's not good at it at all, right? We know.
He's been selling his bank since last year too. Look at
And by the way, I just want to give a shout out to Uncle Warren. This is not a knock on him at all. Quite the opposite. He is the fucking man. And I will always tell you he's the man because he is. Like, he is a gangster. And like now he's like, you know, like a cute old man drinking his cherry Coke and everything like that, and like funny haha. But like this guy back in the day was like, oh, this guy.
Yeah.
I would not want to mess with this, you know, a young Warren Buffett. I would not get in his way.
So also last week, US is getting rocked. And meanwhile, the rest of the world's holding up pretty well.
What do you mean the US is getting rocked? What does that mean exactly?
Yeah, the major averages. It was just look at the profit-taking candles last week. Big red candles. Zoom out on all of those charts with big red candles. You're going to find something similar. They're all in pretty awesome long-term uptrends. This was just such classic profit-taking action, and you were seeing it rotate around the globe.
The S&P 500 lost 1.6% last week.
We had some
That's getting rocked.
Look at the chart of Palantir. Dude,
the S&P 500 lost 1. Hold on. The S&P 500 lost 1.6% last week. That is getting rocked.
It's not my fault that you were at the beach. Okay, take a look.
The Dow Jones Industrial Average was down 2.5%. So if 1.6% is getting rocked, what is the Dow?
Only the S&P 500 could tell me anything besides what 4 or 5.
Nasdaq 100 was down 2.25%. Is that really getting rocked? Is that what getting rocked?
Thanks for telling me what 5 stocks are doing.
If you're old enough to remember when stocks would actually get rocked, please raise your hand. Please raise your hand.
Can I have somebody who's been at their desk for the past couple of days and knows what's going on? If you look beneath the surface, Palantir,
my charting session last night, I outcharted 99.99% of Earthlings last night alone,
amazing.
And
you need a new process,
yourself included.
Well, then it's shocking that you don't know what's going on.
I know exactly what's going on. The S&P lost 1.6%. Big fucking deal.
Take a look at small caps. Take a look at transports.
Transports and small caps.
Besides that's your averages that don't tell you anything.
Hold on, that's another story altogether. We should probably talk about that.
Yeah, Rock City out here. Things got slammed last week, and I think it was just classic profit taking. If you look at what got hit the hardest, it's the stuff that's been up the most. So I think they're taking profits and rotating them overseas. This becomes a really big theme. Money managers, asset managers, hedge funds love this ex-US thing. So if it actually starts to work, God forbid, starts to work in a real way for the first time in a decade and a half, I'm talking about real sustained international leadership at the diversified index level. Something like the all-country world showing sustained outperformance, right? Over material timeframes. Something that matters. We haven't seen this in such a long time. If and when it comes, it's not just going to be a spurt that goes away. They're going to chase it like crazy. It's going to be a mega theme. It's going to be years and years of ex-US leadership. You disagree?
Throw up those small caps so you can see that failed breakout. Let us know when is Kenny coming through today?
And guess what? People want to take profits after making money in things for 2 years and seeing the way some of these tech and growth and AI stocks have performed. Don't you look at your account when you're up a couple 100%? Don't you want to take profits and put that somewhere new?
That's terrible. That's dumb.
What do you mean?
Bring in Kenny, then we'll come back to this.
That's human nature, though.
That's dumb.
Kenny time.
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Hey, Mr. Kenny, how are you, my friend?
Good. What's shaking? How's the weekend?
Fantastic. Got a little sun, little saltwater therapy down in Fort Lauderdale. Very nice, very nice.
Is that a real place? Lickadale?
Yeah, Fort Lickadale.
Oh, okay.
Yeah. As in liquor, not lick her. Liquor.
Okay. Okay.
Lickerdale.
Yes.
Don't get mine out of the gutter.
Okay. Moving on.
Moving right along, Kenny Glick. It's a bull market. People are telling me the market is crashing. I'm told the market got rocked last week. 1.6% to the downside, and the S&P 500 constitutes getting rocked. Kenny, remember the old days when the market actually would get rocked?
Well,
Slam?
no. Hey, listen, Friday was rocked enough, and I held on to my bearishness, and people were like, I had to make sure for 7.5 hours. I was like, seriously, I'm not kidding. We're going to sell off into the close today for the first time in 18 months. I just saw the signs. You know what it was? The Palantir running out of steam, coinciding with Reddit, coinciding with Carvana. Those are the three poster children of momentum in this market that doesn't go down. So all three ran out of steam simultaneously. How are you not looking for shorts? So then the VIX finally spiked on Friday. That was the trigger, and we stayed short. We stayed short the entire day. So we were buying Carvana puts and QQQ puts. And then the conversation came to how bearish should we be? Do we actually stay short over the weekend? Thursday week, Friday week, usually Monday week. And then we just went back to the default. Do overnights ever work? No. There's your answer. No need to stay short over the weekend. Nothing ever bad happens. And the market usually gaps up. But I'm still looking for residual selling. So the same attitude that I had on Friday is that I still think the sellers are out there. Strazza's onto something here. I still think you're going to get a little bit more of a down move because that wasn't scary. That was a controlled sell-off. They programmed it. All right, let's get some selling today. 9:30 to 4 o'clock. Fantastic. It wasn't scary. There wasn't a moment where there was no bid, and it was just a programmed sell-offs. Now today, if this gap doesn't hold, that sends ripples of fear through the market, as fearful as you could possibly get in a market that doesn't really go down anymore. So if today sells off, I think it could get really, really scary. But we'll see how that happens, because right now, everything I was looking for is the opposite, but that's what I was looking for. Because if this is a sucker gap like Friday was, we're going to get some selling. So I'm just chilling, and I'm waiting to see if the VIX products wake up again, UVXY, UVIX, the VIX itself. We'll see if the Qs hold this gap, because right now, that complacency is right back in our face. So as a bear here that saw the signs, is it over already? Probably. Every little sell-off that looks like we're going to get something going to the downside, it never gets anything going. So I'm sitting back and waiting today to see how Carvana and Palantir and Reddit and some of those high flyers act, and then I'm going to look to short the hell out of the Qs again.
What about some individual stocks? What's on the move?
I have to look at Carvana because we absolutely nailed it, and it was a sucker gap on Friday, and now they don't have the audacity to try to sucker people into it. So I think we're going to give away another 70 points on Carvana. And I'm just going to wait. Again, I'm not short. We had nice puts on Friday, and we were thinking about holding over the weekend, but we didn't. So now I was hoping to see it gapped up to around 230 so we can nail it again. But if they try to rally it and it doesn't get back above 230, I'm really going to be concentrating on hammering this stock because, again, it ran 180 points after I sold it, and kind of made my good call from $7.50 and $10 not so great anymore when the stock went to 300. So I got revenge on the mind, kind of. Usually what most bears are all pissed off about is that stocks went up after they sold out of them. That's most bears, and this is with Carvana. So again, we've killed it in the last couple of days. I'm just looking for that 3-day smackdown, but I got no problem waiting to see them sucker people in again so I could slam it from the 230.
Throw up that slide too, please, Fonz. This is really this is really nasty. So this is what it looks like to me. So you have a nasty failed breakout. I could have annotated that even better, but this is a nasty failed breakout. And the gap, the open was back below those former highs. So it's like a gap and go, right?
Well, you had the blow off top in the aftermarket. So the earnings came out, the stock spiked down.
Yeah, but look where it opened. Look at the high print of the day.
Yeah,
on Thursday was still below the former highs from last year.
Absolutely. And then Friday was just like, as soon as it opened up, it tanked. So again, I'm just looking, we had that Hindenburg attack where they tried to sucker you in to short it at 176 when
Can you explain? Can you explain the Hindenburg attack, please?
Well, the Hindenburg attack, if you guys are following me on Twitter, I went immediately onto Twitter to make sure you guys weren't falling for this. So Hindenburg, just like the Andrew Lefts, just like any shorting company, they make these big announcements of fraud.
I thought
and
that guy retired.
Yeah, well, after this trade, he did, yeah.
All right.
Yeah. So they'll short something and then they'll concoct a story, spread it on the internet, and then make sure everybody's getting short when you know for certain that they've already got short.
Yeah.
So when Carvana was getting attacked by the Hindenburg report, it was coming into the 6-month VWAP. I was like, nah, this is where you want to cover and go long. And that's where you covered and went long. And it turned out to be a beautiful move. So now I just think because it sold off to that 176 area, if we could break the 225 with some gusto and we get through that 212 area, we could go searching for the Hindenburg low down there at 176. And that's kind of what I'm counting on. But, you know, like I said, I'm so patient right now. The stock has obviously been a very difficult short for anybody that's been watching it over the last 2 years. But we're onto something here. Blow off top on an earnings report. The stock was over 300. Remember, this was a $5 stock less than 2 years ago. So giving back another 50 points from here isn't that significant. And that's kind of what I'm looking for. So, and again, I don't want to miss it. That's why I'm sticking there. I'm concentrating on that one. And then, yeah, that's basically it because, you know, we went checking on NBIS. That's another one, had a blow off top. That was the former Yandex, as we learned. So that kind of thing.
Is that really right? Is that
yeah,
really true?
that's what it turns out to be.
And Yandex is what, the Russian Twitter?
The Russian Google.
The
Get
Russian
it right.
Google. Yeah,
Russian
what can go wrong?
Google. Yeah,
Sure,
so
sure it's fine. I'm sure that's
NBIS
exactly what it is.
and SMCI. So again, the poster children for the monstrous momentum bull market have run out of steam. So will we give way? That's the question right now. So I'm hoping we do. And again, I just want give me 8 more points on the Qs to the downside, and you can have it back.
All right. Ladies and gentlemen, Mr. Kenny Glick, hitthebid.com. If you are not in his room every day, I don't know what you're doing. A little faux show, bro. Little Andy Dufresne.
Be careful, because we're going. Some of these stocks are going back into the Andy Dufresne. We need to just cut sedge out of our lives at this point. But it was a great short because we consistently disappointed. This thing has come out of the Andy Dufresne twice and has been shoved right back into the muck. I think we got to leave this one.
Yeah, but it got overbought on this last breakout attempt, which is different than the others.
Yeah.
Don't ignore it completely. Understand what it is. It's a piece of shit solar stock. We know, right?
Yeah.
And but I don't think you want to ignore it because it did get overbought on this rally, which is not insignificant.
Yeah, I know, but I'm surprised it didn't hold 19 on that pullback. It just gave the whole thing back.
Well, the market was getting rocked, according to Steve Strazza.
Yeah. Well, we'll see what happens today. Like I said, I'm sitting there twisting the diabolical mustache right now. I'm ready to short something. You know, just like I said, keep an eye on the Carvanas, the Reddits, the SMCIs, the Palantirs, the Qs, and I'm ready to punch this market right in the fotch.
All right, do it. All right, Kenny Glick, ladies and gentlemen, give it up for me, y'all. Kenny Glick in the house. A little mean reversion strategy to complement the trend following systems that we like to incorporate. Very nice, very nice. I like it. I know we got Jason Purrs in the house. Is Jason here yet? Spencer? Bring him out.
Bring him out.
Bring him out. We got intermarket to discuss. Dude, Jason's intro is so sick. You know, I'm into it.
I got the coolest intro. That's what I'm gonna say. I got the coolest intro.
I think you actually might. It is pretty badass. Kenny's is pretty dope too, though.
Yeah, I like Kenny's actually.
Yeah, Kenny's is dope too. All right, so throw up. This was not up to date. I know we rallied some more last week. Throw up slide 5, and then we'll go to slide 6, and we'll start there. So the Treasury bonds, Japanese yen, dancing together, right, across the board. So go to the next one and show TLT on its own. You know, to me, this is where it all starts. It's hard to have a conversation about the stock market without including the bond market. And I don't just mean in the current environment, I think always, right?
Oh, I agree. I agree completely. It's always one of the most important pieces when we're doing any type of analysis. And For me, part of the thing that's always was hard to do writing wise was like I have trouble writing about the stock market without talking about the bond market, without talking about oil and all these things, because it's all connected. So just looking at this setup, man, this is an interesting thing. We've been sitting here forever waiting for bonds to do something.
Well, they
They just
stopped
haven't
going
done anything.
down, which is the first thing that needs to happen before they could start going up.
Sure. And we were on the show actually, what was this, about a month ago, and said if bonds were actually going to make a move, now would be the time. And it looks like it's possible. We're still short bonds. The long-term trend is obviously still down, but and I will completely say this against my position, if there is a time that this thing is going to reverse, it's going to happen now. Sentiments at the worst levels we've ever seen.
Is it?
It's at the worst level since
How are you
2018.
quantifying that? That you're saying that sentiment in bonds is the worst we've ever seen?
Since we're talking about, so if you go all the way back to 2018, this is the last time we've actually seen sentiment around these levels and
But how are you
positioning around these
quantifying
levels.
that sentiment, though?
If you're looking at COT positioning, if you're looking at short interest in TLT based on percent, if whatever you're looking at, there's a lot of negative sentiment against bonds. The problem is, though, every time bonds have any sort of a run, a little bit, everybody jumps right back to the long side. And every time that happens, that's where you see these spikes happen and that turns back over. And the thing that bonds are very fundamental in the sense that if we have high inflation rates, if we see growth start to pick up, bonds are just going to start moving back down again. And I think none of people are looking at the fact of, some of these commodities, even though, yes, everybody goes, oil, Jason, you're crazy. Oil is not doing anything. How are you talking about inflation? But if you look at the rest of the commodities complex, inflation is definitely moving the other direction. So if you look at coffee, if you look at cocoa, if you look at, any of these other commodities, the grains, corn continues to hit. It hit a 52-week high a couple weeks ago. It continues to move. Look at the grains across the board. They're starting to bottom out, starting to move higher. And then oil's always going to be the last one to move. Copper obviously is making a move. Everybody's talking about that now. I mean, so I think bonds are.
Did we lose him? Did we lose Jason? Here, if you want to throw up slide 2, throw up the new slide 2. So here we're looking at, and I want to know if this is accurate. Strazza, bring in Strazza for a second. I want to take a look at this while Jason gets his internet together. So in purple, we're looking at the absolute short interest in TLT. In blue, we're looking at as a percentage short. Strazza, any thoughts here? How accurate is this data? Are we good here? So we have the most amount of shorts on an absolute basis. Can you see that, Strazza?
Yeah, there's more shares. You got to look at the short interest percent.
No,
the blue line. I don't know what we're doing with the total shares short with all these charts.
We talked about this last week. I understand that we're looking at the percentage of the shares that are short, but that does not change the fact that on an absolute basis,
Fine.
Every single one of those shorts is a guaranteed buyer. I understand the value of the percentage. I understand. No arguments there. But regardless, on an absolute basis, all of those people have to buy TLT.
Fine, but just notice how in the chart, yes, you're right. There are more shares sold short now in the purple line, but also look how much more volume there is on the chart since that started happening a few years ago. So that's how it works. It doesn't really change any of the mechanics. In terms of the mechanics of a squeeze, it's the blue line that matters, and that's is the only point that I'm making. These charts, I don't understand why I'm looking at lines that don't tell me anything.
So we have on a percentage basis, we have the highest short interest in TLT going back 3 years. Percentage short.
I don't want to express this thesis via bonds.
So you think that the high short interest in bonds can be expressed in a better way than buying bonds?
Yeah, if rates crumble here, I want to own home builders so hard. I want to own home builders, regional banks, speculative growth. I want to own Chinese tech stocks. I'm going to make more money in those vehicles, is what I've learned.
Let's get back to the what we were discussing before, Mr. Strazza.
I think it happens too. I think rates do roll.
Throw up. First of all, I wanted to get there, but we did not mention slide 8. I thought was interesting action last week.
And on that topic, JC, another thing while you were at the spa, Friday, really strange. Jason, did you notice rates got hit Friday, right? So if I'm looking at charts of the bond market Friday morning, I'm thinking to myself, homies are going to be rocking, regional banks are going to be up big, speculative growth, like it's all going to be working today. Instead, the worst, most bearish candles from Friday were all of the interest rate sensitive groups that you would think would be rallying with rates down the way that they were. Look at the candles in the regional banks, the speculative growth, the home builders, with a candle and arc. And then look at what the 10-year did. So just, one of those things that you wouldn't have had on your bingo card, I guess.
Yeah, I mean, we wrote about, all of these, even the correlation between the dollar and rates, because that continues to come up. And the situation again and again, volume too high. Let's see. Jason or Steve, why don't you take over for me? I'll come back.
All right, cool.
Go ahead. Yeah, I'm too bearish. So home builders may have persistent underlying issues. I think they're one of those groups that it's the opposite. They have persistent underlying tailwinds, just these demographical tailwinds that the home builders get to ride, unlike any other group of stocks. I think home builders is one of those groups. This is a mega trend. There's not enough houses. There's not enough affordable houses in our country right now. I think dips. You want to buy dips in a bull market in a group like this.
Are you really talking about affordable housing in this country right now? Are you?
It's a huge
serious?
problem. It's a huge problem. Yeah.
Are you serious?
Yeah. It's going to become a big political issue. Yeah. Yeah, it's real.
Are you really talking about affordable housing? If you can't afford a house in the city you want to live in, go to a city where you can afford to live. What's the problem?
Simple for a lot of people.
How is that not simple?
A lot of people that grew up.
If you can't afford to live in New York City, move to fucking Kansas.
I agree. Listen, I get it. I just don't think that's the reality for everybody.
What do you mean it's not a reality for everybody? If you can't
Some
afford
people
to live,
they just where they're from, and they're not going to leave. Like they want to buy real estate.
Oh, but that's not because they can. It's because they're choosing not to.
Again, I don't. It is what it is.
There's plenty of affordable housing. It's just that not where people want to live. They don't want to live there.
I think cities will be redesigned in a big way in the future, like the whole layout of the country. Yes, there's going to be like new affordable housing city centers popping up.
Can we
in satellite areas?
Can we please go to that slide 8? Go to that slide 8. Because nobody's talking about this at all. This is the Amazon of Latin America. It's a very big deal. Breaking out of this base to new all-time highs. So like in the face of we had some failed breakouts, right? We've talked about some of these failed breakouts. No question. Where does this breakout fit within the context of all that other stuff, you think? Does it matter or does it not matter?
I love this one. I love this.
I know, but what do you love about it?
Oh, this has been a long-term leader.
No. I understand.
One of the best international
from an investment trading standpoint, I get it, but I'm talking about the implications.
I don't know. It's not bearish. What do you mean? This stock is a bellwether. This represents the consumer in South America. So that's it. The same way we would look at Amazon or Walmart and glean information from the trend to the U.S. economy or the U.S. consumer, you do that with this for South America. So green light for the whole region when you're getting new highs from, their online retail platform.
Was that officially a new 52-week high for China last week?
I think so. Depends what index you're looking at.
Let's say the FXI. Is the FXI a fair gauge?
Yeah, that's the right one. I would say.
It was the highest weekly close in FXI in 3 years.
You know what? Catch-up trade, Hang Seng. You guys like it? Catch-up trade. You could do it through Hang Seng Futures or EWH.
Man, I haven't traded the EWH I probably haven't traded the EWH since like 2013, 2012.
Look at the EWH. Tell me it's not going to look more like K-Web and FXI in the future. It is.
I mean, isn't it all the same trade? So you might as well just go high beta if you're going to go that route. And Hank Sang is not the high beta.
Same stocks, different currency.
I got a chart for you guys.
It's that HKD juice.
Going to chart 24 on the chart deck.
Ooh, 24.
Whoa.
So this is the global AD line on the bottom, the NYSE AD line on the top. Just looking at the difference in this, we keep talking about global stocks here over and over again. And I think people aren't getting it. They're just going, yeah, the United States has led for so long. You guys are all crazy. What's wrong with you? And when you look at the global AD line, I think it just tells the story right there. The NYSE AD line, that's the New York Stock Exchange for the United States. That's just kind of topping out, possibly even rolling over. And if you look at the global AD line, it's just continuing to trend higher. So this is a really beautiful way of just kind of understanding why we continue to talk about these global stocks over and over again.
Is it just China, or can you think of a better vehicle, perhaps in Latin America? Is just China and shut up, or you think? Serious question.
No, I personally think it's Latin America more than anything else. But once again, it's a weak dollar trade. And this is the thing we kind of keep saying over and over again. It's not just we're gonna go, hey, China's great, we love China. It's not because we love China. It's because the dollar's weakening. We're seeing the areas with relative strength. Latin America. If you look at the ILF, it's funny, we haven't talked about that ETF in many, many years, and now it's kind of coming onto people's radar.
I was going to say, we've been talking about it a lot lately.
We've been talking about it. We have been talking about it a lot. Yeah. I haven't seen anybody else really talk about it, but the ILF's kind of coming back into favor, and just looking at, and that's the Latin America ETF, and you guys can all look at that for yourself, but that's showing major relative strength compared to all of the other areas in the world. And so, I definitely like Latin America. I think Poland's actually a very interesting place. We have a long in Poland. I can't even think of the last time we've been long Poland or Latin America.
Shout out to the Zloty.
So the Zloty's just ripping, if you continue to look at these areas, to me, it's okay, if you want to be a trader, you want to figure out what has relative strength. Because if we want to just perform like the S&P 500, we should just put our money in the S&P 500 and walk away and go to sleep. But if we want to be in the outperformers and make major returns, we got to look at some of these different areas. And those areas being Latin America, China, even some places in Europe. Europe's looking really good. The European financials are hitting new all-time highs. I mean, it's pretty interesting.
What do you think about the sentiment I was talking about before when I met the Israeli man in Fort Lauderdale, and he's telling me how terrible Europe is and how it's going to completely fall apart over the next couple of years? Isn't that a great microcosm of just the overall sentiment in Europe? I don't know anybody who has anything good to say about Europe, especially the Europeans.
Yes. No, I totally agree with that. If you look at Europe, generally Europe has been this area where so many people have been like, okay, we just got to stay away from Europe. Europe's terrible. It's the worst thing on earth. But if you really look at it, look at the strength in the DAX. Look at the European financials.
Dude, whenever
I don't care if it's the worst economy in the world.
Part of the DAX, they tell me that Germany's in a recession. I'm like, recession? This is the best recession I've ever seen in my life.
Yes, exactly. It's the stock market's hitting new highs, and most of the time that's how trades work for people like us who are technicians. As technical traders, we find that there's a lot of times where the fundamentals look terrible, and we're headed towards a recession, or we're headed towards something in some area. But then the technicals start to look really good. And so most of the time when that happens, those are where the best trades really happen. So I really like the idea that could be a really hot area in the next few years. At the very least, right now, it's a weak dollar play. The dollar's weakening out. We're seeing Europe look very good. We're seeing Latin America look good. We're seeing China look good. I mean, to me, that's a bull market that's just moving globally. And this chart just says it beautifully. It's a global bull market. Continue to stay along these areas that are outperforming. And the United States is driven mainly by tech. So maybe tech is just the underperformer, and there's plenty of other places to invest inside of the United States too, if you want to do that.
What about the underperformance that we're seeing in materials? Doesn't underperformance for materials not make sense when you're looking and seeing some of the other things that we're seeing? Or is it more the commodities themselves and not material stocks?
I mean, the commodities themselves are looking good across the board, except for really energy. Yeah, energy has had its pops and it's moved sideways, and natural gas is just ripping. You know, a lot of people aren't talking about that, but natural gas just continues to make new highs again and again and again. But it's just really the energy that's not really looking that good, and that's the thing that's really going to boost the XLE, which XLE is actually doing pretty well. So we are seeing a lot of these areas that we would expect to see if commodities are doing well to continue to do well. So I really do like the idea here of like, hey, if you want to own, like, think about the S&P 500. It's over 50% in technology at the moment. XLY is
Not
mainly
the S. Oh, because you're saying when you include the other stuff.
yes. When we're including XLY, I mean XLY is mainly technology. XLC is mainly technology. You got Google, and in the XLC it's Google and Facebook, and the XLY it's Amazon. Like, these are mainly technology driven spaces. So when we look at those smaller sectors like materials, like energy, and so on, these are the sectors that I think will do a little bit better going forward than technology. Not saying like I'm getting rid of all my technology stocks. It's a bad thing to invest in technology. I'm just saying in a weak dollar environment, if we're going to see the international stocks moving, those are the areas that are going to move. And technology usually underperforms a little bit in that environment. There are other places to buy technology in, though, and that's another thing. If you look at KWeb or CQQQ, the technology stocks over there look fantastic. So, you know, just pick and choose what you're going to buy going forward.
Throw up the energy. You mentioned the XLE, but I will point you to slide 16, which is the New York Stock Exchange Oil and Gas Index, which includes foreign energy stocks, where the XLE is basically ExxonMobil with a little Conoco sprinkled on top, right? Doesn't this tell that story? The fact that we're above those former highs, we get above 2,000 in this index. You know, and it goes back to what I talk about all the time, how the New York Stock Exchange is the most important universe of stocks in the world because it includes stocks from around the world, right? On the New York Stock Exchange, all those ADRs are there. So this is that, but specifically energy. And it's the only sector, okay? I'll say this again. It's the only sector where the international version looks better than the domestic one, right? You notice
Yes.
that? Every other one, the American one is better than the other. This is the only one.
And I love the idea of just kind of looking at these areas right now, because there's some serious movement. Year to date is something I always look at, and a lot of people go, well, it's only been a month, it's only been a couple months. And it's like, no, you're seeing how investors are positioning. If investors at the end of last year are taking losses in certain areas or taking profits in other areas, and then they have cash to deploy the next year, they're deploying it in areas that are right now international stocks, energy stocks, and that could continue and be a trend for an entire year. This happens again and again, and we've been backtesting this and quantifying it. And what I continue to see each year, now we're only through about 10 years at this point, but through those 10 years, those leading sectors that lead in the month of January usually continue to lead to year end, and have the biggest outperformance. So that's something to continue to keep in mind here, as we saw some of those sectors lead the way in January, and they continue to lead the way in February. And so I got some more charts if you want to go through a couple more before we
let's do 2 more charts and then we'll hop.
go. I got 22 and 25. We can just go through those two.
It's a great chart, dude. It's a great chart.
Yeah, I love this one. It's one I've been updating for years. If you guys join us at our portfolio accelerator events, you know, I kind of give everybody my big macro view on where we're headed inflation wise or deflation wise. And this chart is one thing I kind of always go to, which is just kind of tells you when we're kind of in more of an inflationary environment or a disinflationary environment. And so here, just kind of looking at this thing just trended sideways and chopped around for a long time. But now it's kind of breaking out of that pennant pattern. It's over the old highs and it continues higher now as people are going, you know, bonds are looking strong. Oil's dead. We are seeing that we're still seeing outperformance in the commodity sector, especially as a whole. Coffee is just ripping to new all-time highs every day. It probably sucks for a lot of people who are drinking coffee. If you're buying coffee like we are, you're doing pretty well. So we continue to see new highs in some of these areas, in the softs especially. Corn continues to make new highs. So we're continuing to see this outperformance in the commodity sector. To me, I want to see this continue. I don't think everybody should go out and buy oil today, but I do think there's plenty of other areas inside the commodity market that look great, copper being another one. And so we're very bullish on copper over here. And that's going to put some pressure on bonds still. So if we see copper continue to move, oil at some point will usually follow it. And that's going to put some pressure on the bond market. And this is going to move this chart even higher.
You're going to show the silver gold chart?
Yeah, let's do it.
Let's do it, please. Because this one, to me, I see gold doing its thing. If you would have told me a year and a half ago or whatever, that gold was about to do X, is silver outperforming or underperforming in that environment? And I would have said, hands down, if gold's going to run to 3,000, silver's leading the way in that environment. There's no question in my mind. And that would have been wrong.
Yeah, and I honestly believe the same thing. Gold moving to 3,000 and silver's just kind of sitting around, but it's happened in history.
I mean, silver's worked its way higher also, to be fair.
They're performing, they're performing pretty similarly over the last year. But if we look, at this chart, you're seeing that there's times where silver has these big pops and it shows outperformance. Now, is it going to be a big outperformer like the one we saw in the 2000 after 2008? I don't know. But one of these is probably going to bring that on. And so looking at this one here, it's like, okay, at the very least, you're looking at a time where silver is going to probably outperform for a little while going forward. So I think right now is a great time to be looking at those longs in silver, looking at those silver miners, looking at gold miners. Like that's probably where we're going to start to see outperformance, because at some point in all of these cycles, silver and silver miners outperform. Now, people continue to tell me the times are different. China isn't buying silver. It's not a monetary metal like it used to be, and so on and so forth. However, if you're going to see risk in a sector like gold, we're seeing people like gold right now. People are going to start looking down the pipe and going, okay, well, I want to be long silver too. I want to be long the silver miners. Hey, look at platinum's really cheap. I want to be in that too. And that's what's going to happen. So, I think here we're talking about it right now. And I think so many people are discounting the fact that silver usually explodes. And when this thing explodes, it explodes quickly. And these moves happen very fast. So I do think like we're going to see this move to 50 at some point very soon. We're just trending higher. We're chopping around. At some point, silver becomes a massive outperformer. And I think now is probably the time. This year makes perfect sense for silver to start making a move to 50.
And if silver's going to 50, it's going to 100.
Yeah.
Right? Like we get back to 50, we consolidate up there, we break out, it's gone.
Yes. And there's no way. And people just haven't looked at historically looking at silver. I share this chart all the time on the gold rush, and people have seen me share it a million times, which is go back to the 70s and see those moves that have happened in silver and see what usually happens. Gold is usually outperforming. Everybody's going, okay, well, that's fine. Gold continues to outperform. I think I hate silver. Silver sucks. Let's just stay in gold. And the next thing you know, silver takes out. It's the ultimate catch-up trade.
Got to see it, though.
Yes, we got to see it. But
right,
once again, we're still long here. We're long here. To me, I'm long here.
The outperformance. You got to see the outperformance. You haven't seen any of it yet.
We've seen it. We've seen it starting this year. It's just starting. And if we go back to what we talked about earlier, JC, which is at the beginning of a year where we see money start to flow into, it could continue. Now, this wasn't something we were talking about last year as being, hey, everybody buy silver. It's going to be that outperformer. Now we're seeing reasons to get a little bit more bullish on silver. And so we want our allocations to start going a little bit more into that area. Because I do think this is going to be the ultimate catch-up trade at some point soon.
Strazza has a few comments to make before we do a little recess and hop out early today. Mr. Steve Strazza, please.
Hey, guys. No, we were going to just got some headlines to go through, some stuff I'm seeing out here.
What do you got?
I find this headline with some communities selling some of their RV land, I guess, to Blackstone. Really fascinating. One of the biggest issues down here where I live for years now has been affordable housing. And a lot of it is in the form of these RV parks. It's where a lot of people live down here. and they keep pushing them north from one key to the next. And this Sun Communities owns the majority of them in the keys. And the biggest problem for their business is they're trying to push people out of this land and then sell it to developers, or start to develop it and sell it. And they're making huge money doing this. And then they're putting resorts on these pieces of land. I think this is them basically capitulating and saying, F it. Let's let the private equity guys, they're meaner. Let's let them handle this. But it's like a $5.5 billion deal. This is a huge REIT. So that's really interesting. They specialize in the RV parks. They own like the marinas and all that space. Nothing?
I got nothing. I mean, I don't know anything about real estate. You know, we're looking for a house in the Poconos, and Jason thinks it's a great idea. Strazza thinks it's a great idea.
Yeah.
So how bad could it be?
Rare assets. We talked about it.
What do you call it? Rare something? What rare what?
Rare assets.
Just that's it. Rare assets.
Yeah, it's a rare real estate asset. Also, they're selling it to the Blackstone Infrastructure Fund, which this is just such a huge trend right now. The money being spent by these private equity companies and their infrastructure funds, and really it's just redevelopment, you know, changing land to new things, helping develop, you know, towns that are around. You know what one of the big ones is right now? Everybody wants business by NASA because all the space stuff going on. People want to build that out. So these private equity funds really up to some serious stuff.
And this is like in Florida, Cape Canaveral or whatever?
Sun Communities is everywhere, but they're huge in the Keys. They own all, as you're driving down the overseas, all these little, you'll see their sign, Sun Communities.
Really?
They own the RV park. Yeah. Yeah, a lot of them.
All right.
And there's just deals are going on left and right for these RV parks. They're the hottest thing. But it comes with, they're pushing people out in probably not the most ethical ways. So it comes with some hard work.
I just don't understand what's so great about like trailer parks.
No, dude, it's just the space. It's just space.
Got it. So they're buying a space, they're kicking out the trailers, and now they can do real shit with that. I see what you're saying. Smart.
Yeah. It's valuable land.
I mean, it's kind of messed up, but it's smart, you know.
Yeah. Let Blackstone do it is basically what happened today. Another interesting headline, guys. MicroStrategy. Strategy. I don't like it. Been watching this develop for a long time. Listen, this company is going to collapse eventually. It's not sustainable, and they're going to be the source of the next crypto bear market.
Remember what we said.
Systemic risk.
Remember what we said. If and when MicroStrategy, we got to change the thing now. It's just strategy. If and when this collapses and blows up, you buy Bitcoin. You flip the book long Bitcoin
for sure
on that capitulation.
But it could be a deep and nasty bear market.
Oh, it's going to be gnarly. It's going to be super gnarly, but I think you got to buy it.
Listen, there's no regulator, right? You guys wanted this. There's no regulator to step in and say this is a systemic risk. They own too much. You can't have one person corner a market like this. There's no regulator for that here. And we have the data now. Can you throw up the purchases chart, Alfonso?
I don't think you need a regulator. Let the free markets do its thing. What regulator? Who are you?
All right, so let me explain. MicroStrategy.
He's a commie. He's starting to buy China. He became a commie.
I know. What's the matter with you, regulator?
Let me just explain. First of all, this wouldn't be allowed in traditional markets, or you would have to get permission to own this much of an asset. I'm
glad if he wants to blow himself up, he should have the right to blow himself up and lose his investors all their money. You have the right to do that in this country.
This is a systemically important crypto institution, okay? And the point I'm trying to make is that their business model, what they're doing, and they're showing us they're going to continue to do, won't work forever, right? They're buying more and more Bitcoin at higher prices because that's the way the machine works. They are allowed to buy more Bitcoin. They have the ability to buy more Bitcoin as Bitcoin rises to higher and higher prices. What they're doing right now, to me, is they're piling in at the top. And if it's not the top now, then if it's the top next year or the year after, it'll be the same thing. They'll keep piling in. And they're not going to be able to withstand the kind of drawdowns that come in every crypto bear market, if and when it comes. I just think it's so obvious. 2 years ago, everybody wanted to talk about how this company was going to blow up. Now everybody's talking about how great they are. And what they're doing won't work forever. They've bought more than 15% of their cost basis just this year in Bitcoin holdings. It's just... I don't know. If you're looking to get short, when this party's over, you're not going to have a better vehicle than these guys.
All right. But I don't think that you need to bring in regulators to stop them from blowing up. Let them blow themselves up.
Let's see how bad it is when it happens.
I hope it's horrible. I hope it is a disaster. Nothing would make me happier. And I'll be a buyer that day.
Yeah. It'll be interesting.
Right? Jason laughs because he's
I agree. Yeah, like that's what makes a market is getting these situations that do happen, and that's why as regulators continue to come in and as many as the Fed continues to buy and all these things continue to happen, many people don't get buying opportunities.
The last thing you want is regulators stopping free markets. You don't want that.
This is, at this point, it's a little bit irresponsible. It doesn't end well.
Great. So short it.
Times in the history of financial markets.
No, fine, but that's what makes America great. You don't like it, short it. It's a
bummer. It's a bummer watching this happen so slowly.
What's the short interest now with this bad boy?
Probably nothing like what it was.
Yeah, they've covered, right?
They have now leveraged inverse MicroStrategy funds.
No, I know.
Yes.
I mean, it's just so good. Yeah.
Let's see. Percentage of shares outstanding. Wow, this short interest has gotten killed. Dude, this thing was 30-something% short 2 years ago. Now it's 9.
They've already bought 50,000 Bitcoin this year. They're going really hard. And when you look at the rest of the crypto space, like Bitcoin's on rollover alert and they're just piling in.
You don't think it's interesting how short interest has just gotten destroyed?
Look at the chart. Who could be short?
No, I know, but you know how it works. Like they increase their shorts. You know how it goes. No?
It's been a tough trade. We're talking about thousands of percents here.
No, I know. It's a fair point. Got it. So you just think that they've gotten destroyed. So that the shorts are no longer there because they were forced to no longer be there.
And JC, it's like we talk about.
Fair.
Think about the sentiment, guys, on this name. Just a couple years ago, all the headlines were about how they were a risk and they're going to blow up and it was a Ponzi scheme. Now everybody loves them. This guy's on the Forbes or the Fortune, whatever it was. They're changing their name. He's on CNBC all the time. He's he's in the Mount Rushmore of crypto. Big sentiment shift.
I love the way you put that. That's
then where are you gonna? Well, where are you gonna short it? You got to short it back below the 2000 highs, right?
Dude, you short it right here. You got the VWAP coming from the August lows. It's right here. Throw up the chart. It's right here. This is your level. You got a little short-term top, bang, clean level, pivot lows.
Dude, the 1999 high. Sorry, it's March 2000. The March 2000 high is 333.
How many Bitcoin did they own back then?
Oh my God, are we really gonna go there?
No.
Listen, we're below the highs. So if you want to be short, I am not short MicroStrategies. I hope it goes to 0. I don't care at all. But I'm not short. If we're below 333, which are the March 2000 highs, you want to be short, knock yourself out. Like I don't dislike that trade at all.
Nope. I think
I don't have it on. But I respect it. I respect it.
Shout out Nike. Cool again. Happens fast.
Is Nike cool again?
Not a top. Hashtag not a top.
Is
Great
Nike
American
cool
brand.
Again?
Not a top.
Dude,
looks pretty cool to
chart.
me, dude. That's pretty cool.
What is?
The scoop and score on the Nike.
Of course.
That's called actually a swoosh and score.
Ooh, a swoosh and score. All right, we got to leave it at that. You can't top that. Spencer, hit that recess and let's go. Swoosh and score, Strazza. You know, for somebody who is as uncreative as you are, you have been very creative lately. Like you are on another level of creativity. I just must say.
I mean, you keep saying that, and I keep surprising you. Eventually, we're just gonna have to say it's normal.
I don't know if you have like. I don't know if you're using AI.
You just didn't notice, JC.
It's too good. It's too good, Strazza. Okay, so
AI uses me.
This is something I think you're going to agree with me on.
Mm-hmm.
So in theory, right? So you have Wagyu, right? Wagyu beef, which is delicious.
You have my attention. Yeah.
I have your attention. And then you have uni, which is sea urchin, also delicious, right?
I know where this is going.
So theoretically, delicious plus delicious equals extra delicious, right?
1 + 1 should equal 2.
At least.
Right. No.
You know, I know better because I go to Japan and I see the Wagyu with the uni on top. And I was like, oh my God, Wagyu with uni on top. Like, it's my two favorite things in the world, right? I did it again, Strazza. I did it again on Friday. I did it again. I ordered. I was like, I know this is a bad idea, but, I was rolling. Like, I was rolling. And I was like, I'm going to do it, see what it is. And just, it further reiterates that you want to eat your uni and then you eat the Wagyu.
Okay.
Right? You don't eat the uni on the Wagyu. Like, just enough is enough.
What was the delivery mechanism here? Can I have just a little bit more details?
There was some rice.
Okay.
I believe there was also some like gold leaves. You know how they do like the gold things on top?
Yes. So this is a pretty common item to serve in like an omakase. So I'm fine with it like in that format, right? If you're gonna give me like one little piece and it's got a little.
Yeah, I did 2 pieces. It was fine.
So you warned me when I was in Tokyo not to put the uni on the Wagyu, but obviously I had to try it for myself.
You have to try it. You got to try it.
So I did put the uni on the Wagyu, and there it's a big, you got a whole thing. It comes on the stick, right? And it's got the uni on it. It's too much. Yeah. It's too much in your mouth at once. It's one of those situations where I think the taste buds just can't figure it out. It's information overload. Stuff starts firing wrong. And it's not 1 + 1 = 2 or 3.
It subtracts.
Yeah.
Like the uni is taking away from the Wagyu. The Wagyu is taking away from the uni. Like you're doing it wrong. One at a time.
I want my uni with the quail egg.
A
little bit of rice. That's it. Keep it simple.
And then you eat the Wagyu.
Yeah, separately.
Yeah, that's the way to do it. All right. But I've just further solidified. And then God forbid you put truffle on it, I'll just punch you in the face. Because now you're just ruining everything.
Truffle's too much.
It's too much. It's not necessary. It's too much.
Jason, have we bored you?
No, I'm just very lost. For me, like I'm very like sea urchins, seafood. I'll eat some salmon, mahi. I really can't venture past that. So
you don't eat the uni?
I've never had it. Never had the experience. I don't know. It sounds pretty like just thinking about.
It sounds like me and Jason are going to need to sit down.
Yeah,
we'll take care of this.
I'm ready. I'm ready. Let's do it. Let's do it.
Yeah. And we are not putting the uni on the Wagyu.
And I'll try anything.
Not on my watch.
Yeah.
No.
I'll try anything. I'm into anything. I'll try it all. But yeah.
Yeah. You just have to go out for sushi with JC once.
Let's do it.
Yeah.
Once you do that once, then you'll understand. A lot of things will start to make more sense.
Life will make more sense.
So, guys, are you watching the new White Lotus season? JC, you've been busy. Jason, you're not watching?
I don't do TV really.
I've never seen it. Maybe that's what I need to do.
It's like the new hot show on HBO these days. Pretty good. Slow start. We're two episodes in, so I guess I got nobody to chat with it about.
Better than Penguin?
No. I loved Penguin.
Yeah, nothing's better.
I love Batman.
All right. Well.
All right. Cool.
Oh, there he is.
There he is, the voice of God.
Yeah, that's it. Thanks for watching, I guess. Smash the like. Go make some money. We'll see you tomorrow, all right?
YOLO responsibly.
All right. See you guys later.
Adios.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go